Thank you, Astha. A warm good evening to all the dear friends who have joined today in this all-important webinar. So, India is emerging as a very important destination throughout the world, and we are seeing how our able Prime Minister of India is taking brand India throughout the length and breadth of the entire world. The transactions which are transnational between our country, other country, flow of capital, etc., has increased. And we are seeing lots of investment being made in India. Today's topic relating to TCS, in that regard, is an extremely important step by BVSS. It seems that the government has raised the TCS rates, which will all be discussed by our today's speaker and ably monitored by the chairman of the session today. It seems that increase in rates, the government feels that capital should come to India. It is more than welcome, but capital should not leave India. And we all know that capital is the lifeblood of any economy. Though we may take this decision with some sort of a pinch of salt, because 20% rate, my friend will be elaborating that, is quite a high rate. And being a basically like an advance tax only, person would feel that why he should pay this much amount of tax. In fact, if he is not required to pay any tax, it may so happen that it may be his already accrued income on which he has already paid the taxes, etc. Still, why he should pay the taxes? But I think we should look at all these decisions in a more holistic manner rather than in piecemeal manner. And if the overall policy of the government is to attract capital to the country and to make India a manufacturing destination, in fact, we all would have read the news today that even the fighter jet engines would now start to be made in India. That is today's news, where I think General Electric head has promised to Modi ji that they shall be starting this manufacturing very soon. So we are all very eager. From part of BVSS, we are all very, very eager to see that how India progresses from 3 trillion to 5 trillion to 8 trillion in the coming decade, and how India becomes, India was till now only the service capital of the world, especially the software services. Now, how it emerges as a leader in manufacturing position in the world, that is something which we are all visualizing and like enjoying in the foresight. So for the more details and to take forward the seminar, Astha, please take it forward.
Thank you for setting the tone of today's webinar very well, Puneetji. So I would like to now take this opportunity to introduce our panelists for today. Our chairman of the webinar is C.A. Sachin Sinha, who is a very well-known name in the field of direct taxes. C.A. Sachin Sinha is a fellow member of ICAI who has more than 20 years of experience. He's a founder partner of a Delhi-based firm, Prakash Sachin and Company. He has in-hand experience in the field of taxation, both domestic and international. He has developed himself in the advisory and litigation and handling other commercial issues. He has completed a wide array of post-qualification courses of the ICAI, ranging from international taxation, transfer pricing, audited and taxation of non-profit organizations, concrete audit of banks, forensic audit and fraud detection, and many other courses. He is very actively associated with the Chamber of Tax Consultants and has deliberated more than 400 seminars and webinars on different topics of domestic and international taxation. He is also a member of the study group of the Direct Tax Committee from the years 2021 to 23-24. And he is also a member of the group formed by the ICAI, which had contributed towards the revised guidance note on tax audit for financial year 22-23 and 23-24. He is also a member of the International Tax Committee of ICAI in the previous year and current year. And he is also a member of the Direct Tax Committee. He has also been a special invitee in the study group of International Tax Committee of NIRC, a co-opted member of the CPE Committee of the NIRC of ICAI, an executive committee member of the IFA India branch, a member of Research Committee of International Taxation of NIRC, a visiting faculty of the ICAI final course to deliberate on the international taxation, member of the expert committee of the Direct Tax Committee of ICAI, member of the recently formed group by the ICAI for UAE taxation. In fact, he has also contributed towards the background material on the UAE corporate tax. We are very honored to have you on board, sir. Welcome to today. Our speaker for today is CA Akshat Maheshwari. CA Akshat Maheshwari is a chartered accountant with more than 8 years of experience in the field of international taxation and transfer pricing. He's currently a partner at a Delhi-based firm, and his prime area of practice is transfer pricing, cross-border structuring, business valuation, assessment, and development of SOPs and organization. His clientele includes various MNCs involved in inbound and outbound transactions. He is an active member of the International Fiscal Association, IFA, Bombay Chartered Accountant Society, BCAS, and Chamber of Tax Consultants. He has been regularly deliberating sessions on international taxation and transfer pricing at various levels. Also, the faculty for the course of International Tax conducted by the ICAI and a special invitee to the International Taxation Committee of the ICAI for FY 22-23. He's also on board of the Direct Tax Committee. And just like Mr. Sachin Sinha, he has also contributed towards the background material on UAE corporate tax. He is also a certified forensic audit and fraud detection professional with the ICAI. I would like to extend warm welcome to you, Akshat.
Thank you so much.
Our today's webinar is on a very relevant topic of changes in tax collection at source on outward foreign remittances, which will be applicable from 1st July 2023. As Puneetji has explained earlier, this world is a global village now. With increasing purchasing power of Indians, the volume of spending in foreign currency by Indians has increased by manifold over the past few years, which has resulted in the regulation over these outward foreign remittances. Majorly, the outward foreign remittances are governed by the provisions of the Foreign Exchange Management Act, FEMA. But very interestingly, these transactions are also affected by the provisions of the Income Tax Act through the provisions of tax collection source, which we'll be discussing today under section 2060(1)(g). Today's webinar is divided into 4 to 5 sections. Let me just walk you through the subtopics before I hand over the mic to Akshat. So broadly, today's webinar, we will be covering the basics. We'll be brushing the basics of the concepts under FEMA and income tax, ranging from foreign outward remittances, capital and current account transactions, liberated remittance scheme, which is the LRS, and the provisions of income tax pertaining to tax collection at source. Then we'll move on to the provisions of section 2060(1)(g), pre-Finance Act 2023 and post-Finance Act 2023. And in the end, we will be taking a few practical case studies to understand and apply the concepts of FEMA and income tax to whatever we have studied throughout the webinar. Towards the end of the webinar, we'll open the house for questions. Therefore, I request all the attendees to post the queries in the chat box. If time allows, we'll definitely take them up towards the end. Akshat, over to you now.
Thank you. Thank you so much, Asta, for setting the context for today's webinar. So, welcome friends and my seniors, and for the interactive session today on the TCS changes in TCS provisions with effect from 1st July 23. So, as Asta mentioned, we start from the basic definition under the FEMA Act. So, setting that when we're talking about FEMA, the point comes into whatever remittance we are making outside India. The remittance outside India is being managed as per the current account transaction rules. The current account transaction for FEMA, it means withdrawal of foreign exchange from an authorized person. What are the current account? What are the various ways in which remittance outside India can be made by an individual or any entity? It can either remit to opening of a letter of credit. It can also use international credit card or international debit card or ATM card by which remittance can be made outside India. And lastly, by any other mechanism by which we can create a foreign exchange liability. In that scenario, an remittance outside India can be made. So next we move on to what type of transactions are covered under FEMA. Firstly, we have capital account transactions. and current account transactions. Capital account transactions are those transactions which alters the assets or liabilities of a person resident in of a person resident in India who is having assets and liabilities outside India, or of a person who is a resident outside resident who is a non-resident, which alters the assets and liabilities of that person in India. So these definitions are covered under the under the regulations of FEMA. As per Regulation 3, Regulation 3 deals with. Yes, sir.
Yeah, Akshat, sorry to interrupt you. There is some technical issue. There people are not able to hear your audio properly. Am I audible to everybody? Can you just give me a hands up or a yes or no in the chat box? Can everyone hear me? Good. Akshat, can you just talk for 1 second?
Sure.
Is Akshat audible to everybody? Akshat, can you just read the slides so that we can just check?
So I was saying, capital account transactions are those transactions which alters the assets and liabilities of a person resident in India, outside India, and of a person of a non-resident, their assets and liabilities in India. So I think it's audible, Asta, now, is it?
Yeah. Is Akshat audible to everybody? I can hear Akshat very clearly.
Perfect. I'll start.
Okay, let's continue. If there's any problem, I'll definitely let you know. Really sorry.
So the Regulation 3 deals with permissible capital account transaction for a person resident in India, and a regulation Schedule 1 deals with a person resident in India, and Schedule 2 deals with non-resident. So so I give an example. For example, an Indian person who wants to invest in a land outside India, or who wants to subscribe to the securities of a foreign company from India, that will be covered under Schedule 1 of the Regulation 3. Whereas even a non-resident can buy or sell property in India. All those transactions will be covered under the definition of capital account transactions. There are certain prohibited transactions which is covered under Regulation 4. For example, chit fund based companies, Nidhi, a non-resident cannot invest in chit fund based companies in India or a Nidhi company in India. So there is certain transaction which is not permissible by the RBI.
Yeah, Akshat, can you come a little closer to the mic?
Okay.
Yeah.
Sorry. And similarly, now we move on to current account transactions. So current account transactions is defined under the FEMA as any other transaction not being a capital account transaction. So, for example, payment regarding to short-term banking credit facilities, any interest on loans, any remittance for maintenance of family abroad, or spouse or children, or relating to foreign travel, education, medical care of parents, spouse, or children. These are the only certain examples which I have covered under current account transactions. So, as in capital account transactions, there were two subcategories: permissible and not permissible. Similarly, in current account transaction, there are three schedules. First schedule is prohibited transaction, wherein wherein a person cannot do all these transactions. The list I have mentioned on the screen, for example, remittance out of lottery winnings, remittance out of racing, horse racing, or remittance out of towards equity investment, any dividend in which dividend balance is applicable, any callback service of telephones. These are this list is an all-inclusive list, and these are the prohibited transactions. So, Asta, just let me know if my speed is going fast. Okay, yeah. And similarly, now after Schedule 1, Schedule 2 are those transactions which require prior approval of the central government. So, in the beginning, Asta mentioned about LRA scheme. So, these transactions are also not covered under the LRA scheme that we will discuss at the later stage. But in these particular transactions, a prior approval of the central government is required. So it's and the main point of our context of the entire presentation pertains to Schedule 3, which require the approval of the RBI. So whenever on all these transactions, so if those transactions are not covered under Schedule 1 and 2, they would be covered under Schedule 3. Schedule 3 has a limit. So as we discussed about liberalized remittance scheme, LRS scheme is a scheme which is applicable only for individuals, and a limit has been specified by the RBI for making any transactions which an individual wants to do abroad. So they have capped a limit. So we will also understand about why the limit of this amount has been capped and what was the limit previously, and why the RBI always change those limits. That we will discuss during the later stage of the presentation. So so under Schedule, the major transactions which are covered are private visits to any country abroad, or any gift or donation being done by the individual or the any person, any immigration services, maintenance of close relatives, travel for business, attending conferences, or meeting the medical expenses of a person. And also, if you see in this particular point, I'll just try and it says that for meeting medical expenses or checkup or abroad, or for accompanying as an attendant to a patient going abroad for medical treatment. So that's a point which RBI has given, that okay, if a person is going for medical operations outside India, he or she will be having an accompanying person along with that patient. So that limit is also been prescribed in Schedule 3. And so in respect to certain transactions, those transactions are covered under the definition of LRS, Liberalized Remittance Scheme. So for example, personal visits, personal gifts, donations, and going for employment abroad, or for maintenance of family members, or for medical treatment, those transactions will be covered under LRS. And the present limit of making an outward remittance in LRS is $250,000 US. This limit is applicable on financial year basis. So in as per India, April to March is the financial year, and LRS constitutes of both capital account transaction as well as current account transaction. So if suppose I can make an X amount of current account transaction and another amount of capital account transaction, the total cumulative value shall not exceed $250,000. This limit is on individual specific. So if suppose I am doing a payment on behalf of four of my family, there are 4 members. If I'm making a payment of through my individual account for 4 members, that would be classified as only one transaction because I have made that remittance. And as I said that LRS is only applicable for individuals, so it is not the scheme is not available for corporates, partnership firm, HUF, trust, NGOs, etc. So this is just a chart which I've prepared regarding what was the LRS limit initially when it was introduced, which if you see, it was on a rising trend up to 2007, and then the LRS was reduced in 2013, and now it is at its peak at 250,000, which was set up in May 2015. So, and generally these limits is being monitored based on foreign exchange outflow, which is being done outside India, so as to maintain the foreign exchange reserves with the RBI. So, when we discussed about Schedule 3, in which RBI approval is required, in all those cases, those certain transactions are covered in the LRS definition. Opening a foreign currency account, or giving loans, or making any acquisition of any inward property, all those are covered under the definition of LRS. So, next is, okay. So as I mentioned that LRS only applicable wherein the approval of RBI is required. If it's a prohibited transaction, we can't make the remittance, even if approval of central government is required. In that case, also LRS limit is not maintained. So, okay, and also this scheme is not applicable for those countries which is identified by the FATF, that is Financial Action Task Force. So any remittance which is being made to those countries will not be permissible under LRS. So in that case, you have to go for the RBI approval. And those some of the countries are mentioned on the website of the FATF website. So those FATF FATF has classified certain countries wherein proper control mechanism is not there. For example, there's certain risk of committing acts of terrorism and all. So, and also whenever you're making a payment through LRS, PAN number is mandatory under this scheme. So I think Asta, so this was a brief introduction about FEMA. So as you
Okay. So now that we have brushed the concepts of outward foreign remittance related to FEMA, let's move on to the next part of the deck, which relates to the concept of tax collection at source, TCS, under Income Tax Act.
Okay, so thank you, Asta. So TCS was introduced in the Finance Act regarding collection on the amount which is being, it's a tax on the collection which is being deposited on by the collector on basically by the collector. They on behalf of the collectee they deposit that sum, and that collectee can claim a tax credit at the time of filing of return. The point of collection for TCS is at the time was earlier of receipt of amount or debiting the account in the books of the collecting. Section 206C deals with the provisions of TCS or the provision of TCS. So, basically, just a slide which I try to highlight about what is the difference between TDS and TCS. So in TDS, it's a tax deduction which is done on the invoice amount, and the net amount of payment is being done in case of TDS. In case of TCS, it's an over and above the collection amount that TCS is deposited by the collector, and they deposit on behalf for the collecting. So, yeah, Asta, anything else regarding TCS?
Okay. I think because most of us are chartered accountants and these basics are very much clear to, but it's a good revision for every one of us. So now let's come to the main topic for today, which is studying of the provisions related to foreign remittances under section 206C 1G.
So to make it more interactive, I made this slide in two perspectives. One is 206C 1G prior to Finance Act 2023. The amendments were done in 2023 Finance Act, and what is the amendment which was done in Finance Act 2023? So prior to the amendments in 2023, it said that this section was introduced. This section was introduced with effect from 1st October 2020, and the reason for bringing this change was to cast a wider tax net. And that all the taxpayers are covered under those tax net. So what happened in earlier? There were basically two actions which were classified in the 206C 1G. One was the sale of overseas tour package, and the other transactions which are related to LRS of the LRS scheme of the RBI. So in case of overseas tour program package, what used to happen whenever we go to a travel agent and we go for booking a package, so he used to deduct a tax on any amount, be it 1 lakh, 2 lakh, any amount. The travel agent will collect a certain tax amount on our behalf. That tax rate was 5%, and regarding the other remittances which were covered under LRS, that can be for maintenance of family abroad, or it can be for medical facilities, or for studying abroad. All those, the limit was 5% of the TCS will be collected by the AD bank if the limit exceeds 7 lakh rupees in the financial year. So there was also one instance wherein if the transaction value exceeds 7 lakh rupees, but the amount which is being remitted is on account of the loan which is obtained from any financial institution as defined under section 80E. 80E, as we know, deals with for higher education. If we are obtaining the loan, in that scenario, the TCS rate would be 0.5%. So if suppose I am having surplus funds in my accounts, and even though I am going for studying, if I'm remitting those funds for studying abroad, in that scenario the tax rate would be 5%. But if we are taking a loan and then remitting that much amount, in that case the tax rate would be 0.5%. The basic reason of differentiation was due to taxing HNIs which are having surplus funds, and the tax rate for them would be at a higher rate. And if a normal individual is going by taking loan, the tax rate is quite less. So that was the idea of differentiation. So I think this slide gives an overall perspective about prior to 2023 amendments. Also, I've copied the BVSS Act. I think I've summarized that in my previous slide. So if you want, Asta, I can proceed further and not wait for Finance Act. So next, we move on to the main purpose of this today's webinar, the TCS provisions which are applicable post the amendments in financial 2023. So everybody else, I think everybody is hearing that for any transaction which we are doing through international credit card, TCS will be applicable. That's a significant change which has been brought in by the Income Tax Act. Earlier, what used to happen that those payments was not classified under the LRS scheme. So that was a benefit which every person was using that. For example, if suppose I want to remit 10 lakh rupees, I want to remit, suppose $300,000 outside India, for example. My LRS limit is only $250,000. So what we used to do, what everybody used to do, they used to exhaust the 250,000 limit of the LRS, and for the remaining 50,000, they used to swipe through credit card. So that was an unaccounted transaction which everybody was taking the benefit of. So to curb that practice, this amendment was brought in the Finance Act 23, and also the rate has been changed in case of certain transactions, so as to increase the rate of collection of rate of tax collection. So these are the changes I've highlighted in 2061G is regarding earlier the word out of India from a buyer was mentioned. So if suppose even if now they have deleted the word out of India, so it means even if I'm sitting in India and I am doing an international payment by here, even that would be covered under this definition. Need not mean that I have to go outside India and make that payment. So all those transactions by sitting over here will also be covered under this definition. The second change in the section was the tax rate has been changed from 5% to 20% in some of the transactions, which we will discuss. And also they've also mentioned that in case the amount is less than 7 lakh rupees and is for the purposes of education or medical treatment, in that case the amendment has been done. In case of overseas tour program package, there's no amendment. So as it was earlier, the same will be applicable. So if I come to my basic summary slide, so now there are two transactions which you're talking about. One would be in case of an overseas tour package. Now the earlier rate was 5%, which has been increased to 10 to 20% without any limit. So even if it will be a 1 lakh rupees transaction payment to the program tour manager, in that case, 20% flat rate that travel agent will collect on my behalf and deposit my as a tax. And in case of medical treatment or education, if the tax rate would be 5%, there is no change in this particular transaction. It is same as it was earlier. And in case of any other transaction which is not classified, then the tax rate would be 20%. So in this case, even credit card would be applicable. Credit card payments would be applicable. And as I said, that 7 lakh limit is for financial year. If any payment exceeding 7 lakh rupees in a financial year, over and above that, TCS will be applicable. And apart from that, there is no change. And So, are there any points up till now regarding if anybody has any queries, so we can take later, or shall we take now?
I think let's take it towards the end of the deck.
Okay. So that's a summary file which we have analyzed regarding pre-FA23 and post-FA23. So for the purpose of education, if it is due to loan obtained by the person, in that case there is no change. In case of purposes other than for the purpose of medical treatment, other than one or purpose of medical treatment. For example, if I'm having my surplus funds and I am making that payment for education, or for the purpose of medical treatment, then the tax rate would be same 5%. Overseas tour package, the taxes have been updated to 20%. And in any other case, so earlier the limit was 5% if the amount is in excess of 7 lakh rupees. In the Finance Act, the change was 20% without any threshold limit was there. But the Ministry of Finance has came up with a notification, and we have mentioned that in case of international debit and credit cards, the limit of 7 lakh will sustain. So if I am making any payment apart from debit or credit card, then the 20% limit will be applicable. And in case of credit card and debit card, 7 lakh limit for the financial year will not attract TDS. So, Asta, this was basically one more slide. And next, we move on to the clarification which was issued by the RBI. They have also omitted the word, the Rule 7 of the Foreign Exchange Management Act. So, what does Rule 7 says? Rule 7 of the current account transaction rules meant that nothing in the Rule 5 shall be applicable in case of international credit card for making payment by a person towards meeting expenses when such person is on a visit outside India. So that was a control mechanism which was being handled by RBI. So they deleted that clause. So now the entire amount, so that the rules of FEMA are incongruent with the rules of Income Tax Act, this change was brought in. And that exemption has been removed. So if suppose it's not required that a person should go outside India and use the international credit card. If I'm using from India, even that would be covered now as per the RBI guidelines. And what was the reason for bringing all those changes is everybody's question on their mind, by why they have changed the tax 20%, why I'm supposed to pay TCS. So TCS is not a final tax which we have to pay. Everybody is supposed to pay advance tax also based on quarterly mechanisms. So even if we are paying TCS, then that amount, TCS amount, can be adjusted against the regular income, and it can be adjusted through advance tax and payments accordingly. So, for example, if my TCS is being collected, it will be treated as my advance tax also being paid, and that amount, the liability of the advance tax amount will be reduced by the TCS amount. Everybody's question is also made by why 20% TCS is there. So this was a clarification which we have, the FAQs which was shared by the Ministry of Finance. It says that every more or less almost of the individuals are covered under 20%, 30% tax bracket. So to make it, in congruence to all the provisions of the Act, this suggestion was incorporated by the government. As we also know now, in most of the cases, even if suppose individual is not having a PAN, then the higher tax rate of 20% will be applicable. In recent amendments, in case of payment for fee for technical services, as Section 115A, the taxes have been increased from 10% to 20%. So probably the reason of bringing 20% was to justify all the existing provisions of the law. And okay, and this was also a countermeasure which they have quoted was the LRS payments are at a high in compared to disclosed incomes. So earlier, a lot of payments made to credit card were unaccounted for. So to bring that into ambit, this provision was brought in, and they also have mentioned that for educational purposes or for medical expenses, there's no change in the TCS rate. It is same as it was earlier. And then mainly the primary impact is on HNIs and the person who going abroad or gifting to non-residents. So this was the reason of these are some of the reasons which they have quoted why they brought in this change in this law. So Asta, so this was the brief beginning for introduction about the FEMA Act and TCS and why the RBI is also interlinked with the income tax. Yeah.
Thank you for fleshing the concepts very beautifully, Akshat. So now we walked through the concepts given under FEMA, then income tax through TCS. Then we've also studied the provisions of Section 206C1G, pre and post Finance Act 2023. And most importantly, I mean, the question that is there in everybody's mind, not only just professionals, but laymen also, that why was the need to, increase the tax rate and increase the tax net as well. So all that has been addressed. And I think now we are ready to move on to the highlight of today's webinar, which are case studies. So can you move to the next slide? So what we will do is here that we have developed a few case studies on the basis of hypothetical situations, wherein we pick up the concepts from FEMA and income tax. And for this, I would like to invite our chairman, C.A. Sachin Sinha, to help us resolve these case studies. Hello, sir. Okay, so case study 1. Mr. A has booked business class flight tickets for international travel for his family.
Somebody raised the hand, actually.
Sorry?
Somebody raised the hand, I think.
Yeah, okay, we'll address that after the case studies then. Probably it might get covered during these case studies only. So Mr. A has booked his business class flight ticket for international travel for his family using his credit card. The total incurred expense is rupees 7.5 lakhs on 23rd June, today, 2023. The credit card cycle of Mr. A is from 15th June to 14 July. That is, due date of payment will be 15 July 23. Now we wish to understand how will the credit card company collect tax from such a person?
Shall I?
Yeah, Sachinji?
Okay, so you want my input?
Yeah, of course. So
okay, great.
Yeah.
So first of all, let me thank to BVSS for giving me this opportunity, and excellent deliberation by Akshat so far, because he has covered step-by-step understanding, and the PPT is so generously prepared, and the case study, of course, this is the highlight actually. Right. To engage all the participants, because this is a real test, whether you have learned the earlier slide or not.
True.
So to my understanding, when we if I read these questions, Mr. A has booked business class flight tickets in international travel for his family using credit card. So of course, since he has incurred 7.5 lakh, and that too on 23rd June. So the tax, earlier the tax rate was 5%. And from 1st July, it will go to 20%. Right? So, Akshat, correct me if I'm wrong.
No, actually, sir, it's not true for a booking it's through booking of the credit card. It's not, no travel expenses involved. So that was not, so in my view, if we had booked through credit card earlier, the limit would be tax rate would be nil in my view.
Correct. So it means it will be applicable from 1st July.
1st July.
Okay. So assuming you, as you mentioned in the fact that the credit card period, the billing cycle is 15th June to 14th July. So the language which is given in the section, the shall collect the tax at the time of debit or collection of payment. So debit will be when you book the ticket. When you book the ticket, you debit the person. Or at the time of collection, whichever is earlier. So earlier event is beyond the tax period, so it is not covered, to my mind.
True. And just to change the fact a little, let's say if the expense was incurred on 2nd July, then I think the story would have changed and the new provisions will come into play in this particular scenario.
Yes,
right?
yes, of course.
Great. Akshat, you would like to add something here?
So in my view also the understanding is correct, because since we have done the transaction prior to 1st July, so in that case, merely settlement. So settlement is happening after 1st July.
Right.
Or those who were asked for the settlement is just about transaction. So as Sachin sir rightly mentioned that TCS in such a case will not be applicable.
Great. So next move on to second case study. So we have different parts to this particular case study. Sachinji, Miss A has to remit her fees, rupees 20 lakhs, for pursuing her undergraduate degree in USA. How will the TCS will be attracted in following cases? So this is subpart 1. Her father has transferred the funds from his account to his daughter's university directly. So you want me to read the scenarios first and then
No. Because all the situations are individually should be individually tested.
Okay, so I think then
Right. So her father has transferred the fund from his account to his daughter's university directly.
Yes.
So here, if you read the section, the term is the buyer.
Right.
So who is the buyer? If the buyer is the person who is taking the money from or getting the foreign exchange from the authorized dealer.
Right.
Right. So here, in this case, the buyer is the father who is remitting the money to the foreign university for the purpose of education. Okay. So his account will be, so he, in this case, his TCS will be deducted in his hand.
True. Even if it doesn't matter, even for the education of his daughter, it's because he is the remitter. That's why the TCS provisions will be attracted in his hand, right?
Right. Because the language, if you see the section says, for the purpose of education, for the purposes of education. It is not said that for the purpose of his education.
Right.
So purposes of education. So if I'm remitting some money for the purposes of education, so and the buyer, it never says SSC, it's a buyer.
Correct.
So the person who is buying and remitting the money for the purpose which is mentioned here, that is covered.
Moving on to the second part of this query. Now, her friend who is located in Mumbai has transferred the funds from his account to the university directly. So in this case also, it will be attracted in the name, in the PAN of the friend, of the person who has transferred the fund?
Correct.
Exactly.
Okay. Moving on further, her friend who is located in USA has transferred the funds from her account to the university directly.
So in this case, it will not attract because there is no purchase of foreign exchange. So there is no buyer per se in India. So this situation will not cover. And subsequently, if Miss A remit the fund to her friend account, then the situation will change.
Okay, correct. If she's repaying that amount that has been borrowed from
repaying to her friend, then the situation will change, and then the situation will arise that whether it is for the purpose of education or you are repaying the loan from your friend.
So that means if somebody wants to take the benefit of the concessional rate regarding education, you should not follow this path, because that way higher rate can be attracted, correct?
Yes, in fact, I would like to advise something else in this case. So even though you have some sufficient money which you can directly remit, take a loan from bank.
Yeah, I will come to that in the coming
and apply 0.5% rather than 5% or 20%.
Correct. I have a question.
Also be done.
Great. Last scenario is that will be done. So we prepared a case study for that also. So last scenario is Miss A has been awarded a grant from a private trust for funding her education, and the trust has transferred the funds to the university directly.
So in this case, actually, the LRS will not attract because this is applicable only in case of individual, and the trust will not within the ambit of LRS. So this will not apply.
So no TCS will be selected in this case.
Correct.
Great. Akshat, next slide.
So in this case, I think Master, we put in that what if the person is in Delhi?
Right. So basically, the case study is more or less the same. The only difference is instead of for example, in the previous case, the father had transferred the funds directly to the university. Now all the funds are being moved. They are being routed through Miss A's account. So if you look at this first case, the father has given the funds to Miss A, and now she has paid to the university while she's in Delhi.
So in this case, the buyer is the daughter.
The daughter, yeah. Miss
So
A
the buyer
is
the
buyer.
daughter. So yes,
correct.
So daughter will attract.
And the second case is also similar to first. Let's come to the third subpart. Now the friend has given her the funds, and again she has transferred the funds to the university while Miss A was in Delhi.
So her friend located in USA has transferred the fund from her account to Mrs. A. Okay, so Miss A to Miss A,
who's situated
and
in
she
Delhi.
has paid to university.
Yes.
Okay. So in this case, do we need to test that whether this fund has been taken loan as a loan? If yes, then whether from the financial institution or other than financial institution. So 80E is talks about the financial institution. So here taking loan from the friend is not financial institution.
Correct.
So this will not, this benefit will go. And subsequently, since she has remitted the money, so she is the buyer of the fund. So TCS will apply in case of Miss A hand.
Right. Like in the previous scenario, because the fund had directly transferred the funds to the university, that's why TCS didn't come into play. But in this particular case, she transferred it back to Miss A in India, and then she used her account to pay the university. That's why TCS will be attracted, right?
Yes.
Okay. And the last scenario,
will be 5%.
Yeah.
5%.
Yes, because directly paying to university for the purpose of education.
Correct. Now, the fourth part, the private trust has remitted the funds to Miss A for her education, and now Miss A has transferred the funds to university.
I think similar situation will apply.
Similar situation, right? So
Similar
this
situation
not
will
here in the LRS would be there because she's an individual, and TCS
Yes,
will be
because this provision will not apply only in two cases where the number one is relevant, where the tax the buyer is liable to deduct tax. The only situation is given. Otherwise, in all cases, yes, only the rate will change, being as per the case of the fact of the case.
True. Next slide, Akshay. Okay. Now, similar situation, but instead of taking funds from her father or from her friend or for grant, she has used her life savings, on which she's already paid tax. She's already declared that income in her previous year returns. Now, this is a very common question that since the tax is already paid on savings, why is the government subjecting the same tax to TCS? Agreed that the TCS credit will be granted to the assessee, but it will be done from the date of collection. I mean, for the period between date of collection and date of adjustment, it will be like a tax-free loan to the government. No? The money is being used and the assessee is not getting any benefit. So what do you have to say on this?
So I'd like to give an example in this case. So assuming from your professional fees after paying tax, whatever surplus you have, you want to buy a car of, let's say, 15 lakh rupees. So whether TCS will be applicable on this or not?
Yes,
it will be applicable.
It is more than 10 lakhs, so TCS will be applicable.
Right.
Can you take a plea that, see, I have whatever I am paying here, that is my tax paid money, so you cannot collect TCS on this. Okay, so this is two different transactions. On one, you have already paid the tax, but secondly, you are remitting something which is falling under the list. So yes, TCS provision will apply, to my mind.
Correct.
Akshat may have some different view also.
Yeah, Akshat, you have to say something on this.
Very well explained. So again, that is a different aspect of tax which we have paid on the income which we have earned. That TCS is again applicable on a particular some transactions wherein we are doing, and in that case, the buyer is collecting the tax on my behalf, basically, and the seller, the seller is collecting the tax on my behalf. So those two are different transactions.
Okay. One further.
So
assuming just a minute, assuming in the previous slide, let's take a situation because you are making payment to university. So for my son, I have made a payment of, let's say, 10 lakh rupees to university. After 1 month, my son has mind changed and say, I don't want to go there and study. So I requested the university to return back my money, and they returned back. But in the meanwhile, the bank has collected a TCS, then how it will be dealt with?
That's true. So I don't think that TCS will be given back to you anyway. You can just avail it once you file your return. वो तो जो collect हो गया so हो गया, right?
Correct. So absolutely correct. Because there is no provision for reversing the TCS.
Right. And this is a very practical situation. It can happen. Sometimes university changes.
Just because nowadays they give an option for 3 months money back policy or 1 month.
And there is a time gap between, when you remit the sum and you actually take the admission. So, but good situation. Okay, next, Akshat. Mr. X has to travel to Germany for his medical treatment. He's estimating an expense of 10 lakhs. Does he have an option of availing benefit of lower tax collection? Rate or, can lower tax rates का benefit इसको मिल सकता है या नहीं?
So for medical benefit, they have there is lower rate of tax. If it is for the purpose of medical treatment.
Yes.
So if you are buying the foreign currency or if you are remitting the fund for the purpose of medical treatment, for the purposes of medical treatment, then of course the lower rate will be applied. So the two rates are given. One is for the medical treatment and for education purpose, 5%. 5%.
Right.
So in this case also the 5% would be applicable.
Correct.
Now add some more tangent on it. Okay, so assuming two attendants want to have to go with the patient, then how to treat the expenditure of those attendant, because they are not for the medical purpose. Or can we say that this is the wording is for the purpose of medical treatment? Whose treatment?
Not
mentioned. Assuming I'm going for my
again, wouldn't it be the buyer only, like used in the previous case scenarios? Here the buyer is the person who's undergoing medical treatment.
Is it so? So if this is the case, then the other two persons who are going along with him as an attendant, so whether can it be said that you are going for some other purposes and falling under the higher rate of TCS, or they will also fall under the same rate of TCS for the purposes of medical treatment, because the delta is 15%.
Correct.
Okay. Now add more tangent in it, because Akshat had already said that for one attendant, the RBI also says that it will
correct.
cover. So what will be the for second purpose? Now take another situation. The doctor has advised, since you are in Mauritius for the treatment, and after the treatment you have to stay back here and you have to take the fresh air in Mauritius. So stay back and enjoy holiday.
Like tourism now. Okay.
So what will be the situation? Whether can it be said that it is also covered under the purposes of medical treatment, or no, it is for the purpose of other purposes, and then the 20% would be applicable. So how to segregate this? So
Akshat, what do you have to say on this?
So
let's go one by one. First, situation.
So for all those, okay, I'll go to the first point first regarding two attendants. The law is crystal clear that okay, only one attendant person that is allowed. So if suppose two are going, again, how will we be able to distinguish that okay, I am making this payment for the second attendant and it is not for the first attendant? How will government come to know? So probably they will come for a FAQs or something clarification. Again, all these we are discussing is kind of hypothetical right now, and when that transaction will come in place, and you have to apply that mind at that particular point of time. In my view, if the second person is also going for medical treatment, we will as a precaution say that okay, I have not make any payment for the second person. It is for the patient and only the one attendant. I don't know what call you will take at that particular point of time. That is my view. Yeah.
I think if because in this case the responsibility lies on the authorized dealer to collect the tax, so maybe they can have a declaration form wherein they pass on the onus to the collectee.
Yes, absolutely. So in this case, what the banker will do, they will collect the higher rate of tax.
20.
So because they are not, they'll say only one is allowed. So for the second one, I'll deduct higher rate of tax for the safer side. Number one. Number two, the situation will again change. So assuming I am taking $10,000 for the purpose of attendance, and one attendant is allowed. So whether they will segregate 50-50%?
How will they do it? Correct.
Or is there any basis for segregation? Assuming the second attendant says, I have my house there and I can stay at my relative's place. I will take food there. So I will not do any expenditure. So I'll allocate 9,000 on the first and 1,000 on me. So is it possible?
Quite possible. I mean, this is very subjective, like from case to case, and I think there can be n number of scenarios that the authorized dealers will face now.
Or can it be said that any person going with their patient are covered under the medical treatment for the purposes of medical treatment? I am going for the purpose of medical treatment. It is not necessary that I have to undergo for the medical treatment.
Okay, probably yes.
So the language is mentioned. The language is in such a way that for the purposes of medical treatment.
And that's very vague. Like too many things can come under that. So my intent of asking this question was by lower tax collection rate, I meant was like the benefit that you get in TDS, the lower rate of tax reduction. So do we have same provision under TCS also? Wherein, on the ground of medical treatment, you say, 5% is too high for me, I can't afford it. So maybe you can just let go of this rate, or at a lower rate, tax can be collected.
So 197 does not cover section 206C1G.
Okay. Right.
It covers 206C1C only those transactions regarding that for the tools and mining and all those sections. Only those are covered under 197, the lower withholding month.
But I think it is recommendatory in nature, given that medical, it's on a human grounds and it is an expensive affair. So probably the government or CBDT can extend the benefit of 197 to 061G in this
They
particular.
should actually, they should, because it is very higher rate of tax. And if you see, if assuming my expenditure amount is, let's say 1 lakh INR, so I have to pay 1,20,000.
True.
And this is I am taking as a minimum amount of expenditure when you go outside India.
True. Okay, moving further, Akshat. Okay. Mr. X has taken loan against property, LAP, for his son's educational course in Paris. He wants to know whether his loan is covered under Section 80, so that the concessional rate of TCS of 5% is applicable.
Okay. So I think for 80E, it talks about from the financial institution. And I think every financial institution has a separate policy or process for making for allocating loan for the purpose of education. I don't know that whether it is covered within the LAP or not. That I don't know. But if it is covered under LAP, then yes, it should be allowed. Otherwise, there is some scheme for the special scheme for education loan also. And for this purpose, no asset is required to be given as a security money.
Okay, because if we look at the Section 80, it just talks about loan. It doesn't mention that what kind of loan it will be.
No, actually, Asta, it says loan for education. For suppose I'm going for higher education. So when I'm taking a loan against property,
it's a general loan. It's a general loan.
Yeah.
Right.
So in my view, in this particular case, if the usage is not mentioned, and if we are not telling our bankers, in that case, I will receive the funds against property, and if I will remit that funds directly, then the rate would be 5% and not 0.5%. That is my view.
Okay. So can we if somebody takes a loan against property, and then when he's remitting the funds, he tells the AD that listen, although it's a general loan, and he shows the requisite documents of his son's or daughter's admission.
Correct.
So then can the person take the benefit of 0.5%? In this case also it will be 5% only, just because the loan was not of educational loan nature.
Okay. So in that case, the sanction letter which is telling them, in that sanction letter it mentioned that okay, I am hypothecating my property against the loan, against the education of my child. If that is the scenario, then yes, it is.
Then to 80 would be there, right? Okay. In fact, we have
we can add one more tangent in it, because the section says loan obtained from any financial institution defined under Section 80. It does not say education loan.
That was my interpretation.
It does not say education loan. It says loan obtained from the financial institution. What is financial institution? It is defined under 80.
Yes,
so if you see, the definition is given under 80 for the financial institution. So assuming I took a loan from financial institution as LAP and remitting this money, and I am not claiming 80E. Not claiming 80.
Right.
Then can this position be taken that you have used the word? It does not say that the loan as per the as mentioned in 80. It's a defined financial institution under Section 80. So that is only in respect of the 80 should be referred only in respect of financial institution definition.
Correct. So just to summarize this means whether or not you've taken the deduction, that is not relevant, of the interest. What matters is that the loan should be taken from a financial institution defined under 80, and under 80 the loan has to be taken for pursuing of higher education. So in this particular case study, that means the 0.5% concession rate should be applicable, right?
To my mind. But of course, it's always a subject of debate.
Agreed. That's why we are talking on this.
Now we can add more tangent in it.
Sure.
So assuming my daughter wants to undergo a higher education in USA, she paid 5 lakh rupees or 10 lakh rupees education fees or registration fees from here itself. Subsequently, she ordered for uniform also. She ordered for some books also. And she booked her a flat on rent where she will stay for the purpose and carry on her education. So whether all these last 3 items what I have mentioned, that uniform, books, and that rented premises what you have paying rent, whether that also cover under education or not, because the language is for the purposes of education.
Correct.
So it's
I have an input on this. Like, I saw it during bank audit when we go through the sanction letters and all, and the education loan is given, and as a proof to the education loan, the student or the parent is required to submit the tuition fee and whatever fee that needs to be remitted. And the part of that tuition fee structure, we have this uniform fee and stay, because if you're staying on campus, then the mess, the food fees and everything. And I think the entire fund that has been availed as loan is applied towards all these expenses. So if I interpret it that way, if the education loan is not only allocated towards tuition fee, but the incidental expense, I mean, if we have to put it that way. So this is how I interpret. If there's some other opinion, so please.
So the language what they used in the section, they're saying for the purposes of education. For the purposes of education. So of course, I'm purchasing these books for the purpose of education.
I'm staying on the campus.
Purchasing this uniform for the purposes of education. I'm staying here because for the purposes of my education. That's why all covered in for purpose.
Everything is right. Primarily, it's there only.
So if the purpose word is not there, and the wording, if the wording would be for education, then the situation would be different. Purposes of education.
So that increases the ambit then.
Correct. Because if you see the last leg of the overseas program package, how they worded it, or any other expenditure of similar nature, or in relation thereto. Right. So assuming you are paying a visa fees, that is also in relation to.
Correct.
So whether it will fall under this category or not, because in relation to expands the scope. In relation to.
So they have maybe kept it quite open that way. As long as you
kept it for their purpose.
Connected back to education. Right. Connected back to education, that will be covered under here. Actually, you have to add something?
No, true. So again, this will be more clarified, when the government will come with the certain FAQs or combination combinations. And again, it will be very litigative at the end. So again, in this scenario, as you said, that my view would be go with a higher rate of 5% in this scenario which I'm talking about. But again, that would be point of discussion at a later stage. No problem.
Agreed.
So
Agreed.
Yeah, I have another query associated with this case study. Now, suppose the loan was taken by the father in his name. He transferred the sum to his son's account, who in turn transferred it to the foreign university. Now, the son is the remitter or the buyer. Will the son get the benefit, or will the father get the benefit of this 0.5%?
So this will tested in the hands of buyer. If the remitter is his father, then the situation will be different. Since the father is not remitting, father is transferring money to his son's account, and son is remitting, the buyer will test buyer. But the question is whether the father will be eligible to get 80C deduction or not.
80E deduction.
80, sorry.
Okay. No, but if the father is remitting the sum to his son, who is in India, and the son is remitting the sum to university, so in that particular case, 0.5% will not be there because the loan has been taken by the father, not the son.
Correct.
And it's not for education. He's taken a general loan against property, but is used for funding the education of his son. So I don't think 0.5% will be done in this case. It should be 5% only.
It should be 5%.
What do you have to say, Akshat?
So as I understood, father took loan against property. That then the father in India only transferred that funds to son account as a gift, right?
Yes.
Now the funds are with the son. Now son, if son is remitting to that person, against for the foreign institution, it will not be deemed that that son has taken a loan from the bank, right?
Yeah, this is not taken loan from the bank.
So in that scenario, 5% TCS rate would be applicable in such a case.
Yes. This concession rate will not be there. Right. Okay.
One more tangent. Sorry, I meant. One more tangent we can add in it.
Yeah.
Assuming the son is minor. So father has taken loan, transferred the fund to his son's account. Son has a bank account, and from that account he has paid that money to outside India for the purpose of his education. So 5% TCS collected in the name of son. So whether father will be able to get the credit of that TCS?
Clubbing of income.
Clubbing would be there, right?
So clubbing would be there. Yes, because section is clear. Any TDS, TCS 199 says who is under whose hand the income is accessible. But
Correct.
in this case, the income is not accessible because there is no income per se.
Right.
Income is not, there is no income per se. So whether 199 benefit can be attracted or carried over to this section also or not, that needs to be tested over the time.
I have another tangent. So suppose particular facts are the loan has been taken from a charitable institution. Now will the borrower get the benefit of 0.5%?
Financial institution.
Not
Language
so
is
I have
financial
taken it from. So that means financial institution is important here. Although 80 is applicable in both case of charitable and financial institution. If you look at the proviso, but in this particular case, the combination is 80 and financial institution, both. Yes. Okay. So next case study. Mr. X has made an international transaction through credit card, which exceeds rupees 7 lakhs. At the month end, the credit card deposited the TCS on behalf of Mr. X. But at a later stage, at the time of the clearing cycle, Mr. X defaulted in making the payment to the credit card company. What will be the impact in this case?
Okay. So does it make any difference?
I think then the credit card.
So credit card company has to bear the cost.
It won't be.
So it would be the credit card company would be, I think, in this case, would be at a losing end. And if that is a if that is a strategy, suppose everybody defaults, then what would be the impact on the financial economy at that particular stage? Because even they have not collected the sum and they have extra deposited the TCS amount as well. I don't know
Right.
what would be the scenario in that particular case.
True.
Correct.
Do we have more case studies? I think there was another.
Okay.
Yeah. Mr. X, employee of Messrs. Limited, is deployed on a project office abroad. Where are the expenses incurred by Mr. X on behalf of the company due to TCS regulation?
So to my mind, yes, because here the individual who is incurring expenditure using his credit card or he is going outside India,
Forex card,
he is using the Forex, he is buying the Forex. So in this case, yes, TCS provision will be applicable. Now the situation will arise whether the company is going to reimburse, of course, because the client, the employee has did all the expenditure. So company will reimburse him the money. So to what extent? So 100% or 120%?
120%. Why should the person bear the TCS on his account?
So this will again create a litigation between the employer and the employee, because they will say that, see, anyway you will get 20% subsequently.
Credit later, right.
So you'll get the credit. So why 200%? Why
should we pay you
20%? But employee will say, when I will get the credit after 15-20 months.
I mean, the time value of money.
Lend my money to you for 20 months.
Correct.
Pay the interest on that money to me.
Correct. वो तो नहीं मिलेगा. No, but that's a fair point.
And इसमें Asta just wanted to add one thing. तो FAQs और clarification आया था अभी. They have mentioned that okay, if that person is doing the expenses, on the company's account itself,
right?
And if it's a bona fide transaction, it's established that that's a genuine business transaction. In that case, TCS will not be applicable. It will be applicable only if that person is using his or her personal credit card for making the payment relating to the company. In that case.
Yes. In fact, we have Ashish Kabra in the audience who is quoting the same circular which came on 16th May. But I have a question here. If the Forex card is in the name of the employee, although the purpose is business, so how will the authorized dealer come to know that the person is incurring expense for business purpose? I mean, the expenses can be dual, if I am working all day, I go for a movie in the evening. So this, I don't know if someone can clarify on this, that how will the person come to know is pe like karna hai, is pe nahi karna hai?
Right.
So of course, it's a very complex situation. I understand your point. And what Mr. Kabra is referring to, this is a very ideal situation where the company has a corporate card. Whenever the employee
then though it's clear, and that
goes
card
outside
is not
India, they give the corporate credit card. You go and expend it. The company will bear the cost. But what you are
Right,
referring
right,
to,
right.
it's really a complex situation, and these are the most prevalent situation which will come in the most corporate entities.
I'm sure. Okay. Akshat, the case study?
I think.
Okay. Yeah. So now I think we can open the house for queries. We have a few queries from the audience. First, we have from Chetna Bhardwaj. What do we do if we have to send money more than permitted by RBI in a financial year? This is more of a FEMA query. So either of you, Sachin ji or Akshat, can answer this.
Can you just read the query again?
What do we do if we have to send more money than the limit permitted by RBI in a financial year?
So in that case, then you have to go for the RBI approval. So in case of individual, that limit is $250,000. If that is exhausted, then you have to go to the RBI and seek for approval. I think Sachin,
Yes, absolutely correct, sir.
Okay. Next question is from Ashish Kabra. Do we have any option for lower TCS deduction? This we've already addressed in one of the case studies. So I think this is clear.
Correct.
Next question is from Mr. Rajesh Gupta. Can we discuss the TCS provisions applicable on travel agents? There is a sub-agent and an agent and airlines involved. Who will be responsible for the implementation of TCS provisions?
Okay. So if you see, the section is very clear, which says if you are buying a tour package from the tour operator. So who is overseas tour package? What is overseas package? That is already defined in the explanation. So assuming I am buying from DePaul's. So DePaul is providing me a Singapore cruise, and I have made all the payment in India, not in foreign currency, in Indian currency. In that case also it is covered. So DePaul will collect TCS from me. Okay, but next let's take another situation. From my credit card, Indian credit card, or from my debit card, I am purchasing the ticket of, let's say, flight ticket for going to Singapore, booking hotel from paying INR to Singapore. Then in that case it is not covered. It will cover only when you are making payment in the foreign currency, because at that time you are buying the forex. You're buying forex. That's why the clause 1 will apply. So clause 1, clause 2 are very clear, and when it's to be applied, that is absolutely departmental.
Okay. Akshat, would you like to add something?
In addition to that, yeah, one more thing. So again, we're talking about LRS firstly. In LRS, individuals involved. So I think sub-agent would be a business business entity. So if that business entity is doing a transaction with that agent, so in that case, this 2061G will not be applicable, because we are talking about relating to LRS only. And LRS.
Yeah, am I audible?
Yes,
okay.
now audible.
Yeah. So then we have a very interesting question from Mr. Narayan Hegde. The foreign remittance is for the exercise of stock options, ESOP, issued by a foreign entity. Will TCS be applicable here? Does the 7 lakh limit make any change in the applicability? Sachin-ji?
Yes. So first of all, it needs to be tested by the law of the FEMA regulation, that whether LRS fund can be utilized for the purpose of buying a stock option outside India or not. So as per my knowledge, yes, you can do so. So LRS, by using the LRS money. So if this is so, and you are remitting money outside India, see the purpose of A and B, 206C1G, A and B. Right. If you refer A, because your case will fall under A. Right. It will not say that what purpose you are remitting. Under LRS scheme also you can remit the money. Buying a stock option outside India. So I think that is covered here also.
Okay.
Akshat, so what is your view?
Yeah, is there any exception for ESOPs? I mean, are they?
So again, it's a capital account transaction. Asta, it's a capital account transaction.
Okay.
And LRS, it's a combination of both capital and current account transactions. So if it is within that limit, then it will be available. And so if suppose if the limit is more than, so in this case, TCS will be applicable. The rate would be 20%.
The rate would be 20% in this case.
Yes. Yeah. Any other purpose.
Okay. Got it. Then next question is from Mr. Gopal Arora. Why TCS rate of 20%? On purchase of motor cars of above 10 lakhs, the TCS rate is only 1%. But for foreign remittances, it's a whopping 20%. And the purpose is more to the purpose of reporting, but not to increase the tax collection. I think we've already addressing the webinar, but if you wish to add something here, because it's a very genuine pain point. It's not a small fraction.
Okay, so I think Akshat has already covered in one of his slide that why 20%. But let me explain in my own words. So here the issue is not 1% or 5%, or the issue is why 20%. So why there is so much of huge amount. So the idea in this the background what the government has exercised, that most of the people who are traveling outside India or sending money outside India, most of them are even non-filer of ITR. Non-filer of ITR, or they are filing return but not paying any tax, or they are paying tax but very negligible amount. So just to capture those transactions, that if you are paying, so if it is 1% or 2%, they may not bother to come back and file the return to get back that money.
Right.
So they say, okay, just pay 20%, and then you'll automatically come back to me, just say, I want my money back 20%. Then I'll ask you from what are the sources you have expended that money. Then explain the source and enjoy the money, no issue.
Okay, great.
And other what Akshat has already covered, that the 20% is the generalized rate in case of foreign transaction. Generally, if you see the section under 115 capital A, also 20% in case of royalty, FTS, dividend, it is all 20%.
Right.
And similarly, if you don't have any PAN number, then in that case also you have a 20% rate of 206 C or 206 AA. So I think based on that, they have made, okay, anyway, they are going to refund you this money.
Refund or adjust against the advance tax. Yeah.
Sorry?
Refund or adjust against the advance tax liability, which I'm supposed to pay.
Yes.
That is there only. That doesn't go anywhere. That's the end result, that okay, aapko credit mil jayega.
The challenge will come. Challenge will come in future. Like I give an example. So let's take a simple example that my total income is, let's say, 10 lakh rupees in a year, but for the purpose of office expenditure or whatever reason, I went outside India and I expend that money and I got the reimbursement from office. So my total refund amount is, let's say, 1 lakh rupees. So generally, in case of salary, if you see, generally there is no refund, or if there is refund is very nominal amount, because it is tax is calculated on the basis of your actual
slab.
But in this case, what happened? The amount will be higher. So assuming 5 lakh, 10 lakh, 20 lakh. So department will not be very keen to refund you in one go. So in that case, you have to put a lot of effort to get back that money. And it may so happen that during this process, you have to face some notices also.
Could be. Very well said. So I think we just have another question in the chat box from Mr. Srinivas T. How does the TCS pack the pins from outside India? Either it is due to a partnership in an Indian partnership firm or corporation, or plain unsecured loan provided to someone in India. So do we have any TCS provisions applicable in such transactions?
Can you say the question?
So what is the question? Sorry,
I'll repeat again. How does the TCS provision impact the payments from India being made to foreign investors outside India? Either on account of partnership in an Indian partnership firm, corporation, or a plain unsecured loan.
Okay. So assuming you want to make some investment outside India, even you can do it from the LRS money, that is permitted. I think if Akshat will confirm. So it is permitted. But the question is, if you're remitting the money outside India by and 206C 1G clause A will apply, then the 20% provision will attract.
Okay. Any other purpose, that's right.
Any other purpose, or you are making payment for repayment of loan by way of LRS money. So till then you are using your LRS money, it's all covered.
Okay. Akshat?
That is straight, and actually in the case of individuals only LRS limit is there, and if the constitution is different, then we have to check accordingly. In that case, if it's required RBI approval, then RBI approval is required. Otherwise, if the approval is not required, then the approval will not be required. It's that simple as that.
So if it is not covered under LRS, then the TCS should not be attracted, right?
Regarding again, if it's a business transaction, then yes, TCS will not be applicable in that case.
Okay.
2061G deals specifically with the payments which is routed to LRS only.
Right. That's where I was coming from.
So let's take a simple example. I'm a chartered accountant in India. I have taken some services from a US chartered accountant and I'm remitting him money.
Right.
Okay, let's say $1 lakh, for example. So whether it is covered under LRS or not. So this is not under LRS. This is a B2B transaction, a business to business transaction. So it will not cover under the LRS. So in this case, 2061G will not apply.
Not be applicable. Correct. So I think with this, we have come to the end of today's session. Sachinji, I would request you to give concluding remarks and then we'll have vote of thanks.
I think somebody has raised their hands, I think.
Okay. So actually, Akshay, we just have 5 minutes, so we have 2 more. That's right. So if we have time after that, we'll take it up.
So first of all, I'd like to say thank you to BVSS, to all the audience who participated well, and to Akshat who prepared this excellent presentation, and to Astha as well, who moderated the session so well, and she was very thorough in the subject. And frankly speaking, when this assignment came to me that you have to be chairman of this session, and when I come to know that Akshat is there, then I start reading again. And since last 2 days, I'm reading this provision that when the Akshat is there, of course, he will definitely come with some new ideas. My submission is only after reading this section, that just go through the section line by line and word by word. You will see there are so many nuances in it, which needs to be dealt by the TPA or by the department subsequently, either by way of clarification or by way of notification, because it will create a major hue and cry. Secondly, the banker who is a deductor, they have the government has put the responsibility on them that you have to collect the money, and they will definitely try to collect the higher side just to dispose their responsibility.
Right.
And in all this process, the genuine person who is actually using their money, hard-earned money, for the purpose of traveling or for the purpose of medical treatment, they have to be grinding by taking a refund. I don't know whether they would be able to subsequently file the return or not, whether they would be able to get the refund back or not. These are all process. It looks very simple, but when you apply practically, because the banker has a challenge. When Akshat was discussing with me prior to this session, assuming I have four credit cards, and through this all credit card I can make international transaction. So how the banker will come to know that I have crossed the limit? Or is there any mechanism for doing so? Or they will say, okay, each bank has to test 7 lakh. This is not the idea of law. Aggregate of all amount during the financial year. So how they aggregate? So there are so many questions which are still unanswered. And to my mind, the government should come with again another set of clarification or FAQ, so that it will give a boost to the taxpayer and the person who is entering into the transaction. Otherwise, people will try some other ways, which is not legitimate way, but they'll try those ways to avoid all these taxes. So this is my submission. I think apart from this, the session was so well, and I am very enthusiastic for taking all the queries, and Akshat has very well handled all the questions. And thank you, Astha, for moderating the excellent session. Thank you so much.
Thank you. It's our honor, Sachinji, to have you on board. Thank you so much. Thank you for the concluding remarks. Now, I would like to invite our Joint Secretary, CA Ashish Neerajji, to give vote of thanks to our panel comprising of speaker and chairman both. Ashishji, over to you.
Yeah, good evening, everyone. At first, I would like to thank CA Sachin Sinhaji, chairman of the session, for chairing the event. And a very special thanks to CA Akshat Maheshwari for deliberating the subject so well Lots of questions were coming in everyone's mind. And both of you, I will say, Astha was not just moderator. I will, for this event, she was also a co-speaker. So I will thank both of you for such nice deliberations. And I would like to thank all the participants who are there and raising questions. Thank you everyone for on behalf of BVSS. Thank you.
Okay. Thank you so much. Thank you to all attendees. We'll be closing this meeting now. Any queries, they can be either, WhatsApp to the link, or they can be posted on the website, and we can reply from there. Thank you so much. Good evening.
Thank you so much. Thank you.
Thank you. Bye.